Ladies and gentlemen, welcome to the Aditya Vision Q2 FY'24 earnings conference call hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. I would now like to hand the conference over to Mr. Devanshu Bansal from Emkay Global Financial Services. Thank you, and over to you, sir.
Yes, hi. Good evening, everyone. We would like to welcome the management team of Aditya Vision Limited and also thank them for giving us this opportunity to host their Q2 FY'24 earnings call. We have with us today Mr. Yashovardhan Sinha, Chairman and Managing Director, and Ms. Yosham Vardhan, Whole-Time Director. I now request Mr. Sinha to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Devanshu. Very good evening, ladies and gentlemen. We are pleased to welcome you all to our earnings Concall for Q2 and H1 FY'24, where we will discuss the financial performance and strategic decisions made by the company. We have already uploaded our investor presentation on the exchange, and we hope you have had the opportunity to review it. We are very happy to announce that we have delivered overall a strong performance in H1 FY'24 despite seasonally weak Q2, with consistent performance across all financial parameters. As stated earlier, the seasonality factor significantly influences our business operations, with Q2 being our weakest quarter owing to monsoon and Shraddh period. In addition, the entire festive season this year fell in in fact during Q3, whereas festive season started in Q2 in FY'23. What I mean to say that the festive season started in the month of September last year, which falls in Q2, and this year it is going to all festivities are from October onwards. Despite the above, we have delivered good growth in revenues, which reinforces us as a preferred choice of our customers. Our relationship with our customers, supported by our competitive pricing, outstanding customer service, prompt delivery and installation, and successful marketing events such as the Independence Day sale and attractive offers in World Cup season, has given us the desired results. This quarter, we also conducted first of its kind electronic loan melas at 125 plus locations across panchayats and block level in Bihar, Jharkhand and Uttar Pradesh, which has made our brand very popular with first-time rural customers, where we got very good response as well. Our sales in July was flat after experiencing exceptional sale growth in June this year. August and September sales were very robust this year in this Q2 FY'24 with more than 30% growth. And so I want to tell you that in fact June was exceptionally very high in Q1 because entire season was rain-marred. Despite that, so in July the effect was that it remained flat because of very high sales in June. And in fact, in August and September, our sales grew by more than 30%. So resulting in a year-on-year revenue growth of 21% in Q2 FY'24. Our revenue increased from rupees 698 crores in H1 FY'23 to rupees 954 crores in H1 FY'24, a growth of 37%. In line with our revenue, our profit before tax increased by 29% YOY to rupees 62 crores compared to 48 crores, and our profit after tax increased by 24% YOY to rupees 47 crores compared to 38 crores in H1 FY'23. In H1 FY'24, Bihar contributed the most of our revenues with 88% revenue coming from Bihar, followed by Jharkhand and UP, which contributed 10%, and in fact, UP we have just started, so it contributed 2%. This growth in the top line is a result of strong store additions as well as continued growth from our matured stores. As mentioned in our previous earnings call, we had set our sights on expanding our reach in Q2 FY'24. We are pleased to report that we have made steady progress, having opened 13 new stores in Q2 FY'24, with 6 stores in Bihar, 2 stores in Jharkhand, and 5 in Uttar Pradesh, bringing our total store count to 130. This means that we have added 25 stores in H1 FY'24, as against a full year addition of 26 stores in FY'23. Full year we added 26 stores, and we have already added 25 stores in half year of this financial year. We have achieved a significant milestone in our store hyper-scaling strategy. Building on this momentum, we now plan to open additional 10 to 15 stores, new stores in this financial year to reach overall 140 to 145 stores, thus surpassing our initial guidance of 125 stores in FY'24, which we crossed in H1 FY'24 itself. Furthermore, we have revised our initial store opening guidance from 150 stores by FY'25 end to 65 stores by FY'25. We are convinced of the immense consumer opportunity in our core markets, and we believe accelerating store expansion is the correct strategic response. Typically, our stores break even within the first 6 to 8 months, and we are seeing encouraging consumer response in the newer markets. In fact, there is very good demand coming up. Initially, of course, OPEX is high, but these stores are simultaneously maturing also. So we expect very good business coming from these stores in near future. As previously mentioned in our earnings call, our inventory usually remains on the higher side at the end of Q2 and Q4 due to our strategic approach of acquiring inventory aggressively for the festive season and summer season respectively, and we do not want to be stock out situation. Reflecting this, our inventory as of September 30, 2023 amounted to rupees 283 crores based on our optimal procurement strategy. I would like to highlight here that growth in store operating expenses is higher for the quarter due to the strong pace of store additions over the last 12 months. In fact, 30% of our showrooms are less than 6 months old. As these new stores ramp up and start contributing to revenue, we will see benefits flowing into our profitability as well as sales, top line and bottom line. It is also important to note that SSSG for H1 FY'24 is still very healthy at 19%. On August 16, 2023, CRISIL rating upgraded its rating on the long-term facilities of our company to CRISIL A- stable from CRISIL BBB+ stable. This rating reflects our established market position, our extensive experience in the electronic retail industry, and sound operating and financial efficiency. As mentioned previously, we have already achieved market dominance in Bihar and Jharkhand. Now our efforts have started gaining momentum in eastern Uttar Pradesh, where we currently have 13 operational stores, and we are steadily progressing in terms of market penetration. Lastly, I would like to say that we are committed to broadening our customer base, retailing innovative products in innovative methods, and ensuring exceptional customer experiences while maintaining steady financial growth. This commitment propels us to pursue excellence in every facet of our business as we progress in our expansion journey with you all. With this favorable momentum, we maintain a strong belief in our future and our capacity to establish new industry standards. I think that's all. I will now hand over the floor to Mrs. Yushamvardhan to provide an overview of the financial highlights for the quarter. Yushamvardhan, please.
Thank you. Good afternoon, ladies and gentlemen. We are happy to showcase the strong financial performance of Q2 FY'24 and H1 FY'24. Here's a snapshot of our financial outcomes. During H1 FY'24, our revenue increased 82% from 698.11 crore in H1 FY'23 to 954.36 crore in H1 FY'24. Gross margins were maintained at 15% and EBITDA stood at 86 crores. PAT grew by 24% from 37.84 crore in H1 FY'23 to 47.05 crore in H1 FY'24. SSSG in H1 FY'24 stood at 19%. In Q2 FY'24, our revenues recorded a YOY increase of 21%, reaching rupees 313.13 crores, driven by the expansion of our operations and strong SSSG. Our gross margins were effectively maintained at 15%, driven by optimal product mix. The profit before tax for the quarter stood at 12.32 crores, and profit after tax for the quarter stood at 9.63 crores. EBITDA for the quarter stood at 23.1 crores. As mentioned earlier, we have seen strong momentum in store additions, which led to higher operating expenses in a seasonally weak quarter. This has impacted EBITDA growth for this quarter, but we are confident of seeing benefits from the wider store footprint as we head into the festive season. In H1 FY'24, our employee expense has a provision for ESOP amounting to 4 crores, which was split into 2 crores each in Q1 and Q2 FY'24 respectively. In this financial year, a total ESOP provision of 8 crores have to be made out, of which 4 crores have been made in HY FY'24 and the remaining 4 crores will be made in H2 FY'24. However, in the next year, provision of approximately only 2.5 crores will have to be made in the next full financial year FY'25 on account of ESOP. As you are aware, this is a notional expense charged to P&L but does not have any impact on the cash flows. We strongly believe that ESOP granted to our long-term employees will give our team a great motivational advantage in short to long term, benefiting the company manifold. As previously mentioned, our store count reached 130 in Q2 FY'24 with the addition of 13 new showrooms this quarter, including 6 in Bihar, 2 in Jharkhand and 5 in Uttar Pradesh. We can now open the floor for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while the question queue assembles. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bapodara Mayur. Please go ahead.
Hello, sir. Congratulations on good set of numbers. Actually, I wanted to understand about our expansion plans in regard of how we decide on expansion pace, speed of expansion, which parameters we look for.
Okay. That's all?
Yes, that's my first question.
We have already discussed several times. Actually, we look out for the population and we look out for the overall figure nationally provided for penetration of white goods and mobiles and other things. And then we take a decision. In fact, whatever states we are in fact operating in, it has got one of the lowest penetration of white goods. And population-wise, it is almost 30% of the entire Indian population. UP, Bihar, and Jharkhand will contribute. So that way, in fact, we look for the population, how well they have been served there by similar sector, and then we go for and of course data retail data also comes in.
Okay, that's fine. Actually, I am asking about our speed of expansion, like how we define that the expansion speed of our company is okay, right? Means we are not overspeeding ourselves in expansion. So which parameters on like balance sheet and the strength of balance and in that sense, what parameters we look for? Like we are not overspeeding ourselves for expansion, or we are not underspeeding?
In fact, we are having that bandwidth for expansion. That is very clear by numbers what we have done. And as they mature going forward in let us say 6 to 9 months, all these places are very under-penetrated, and we are sure very good business is going to come. So we, of course, I've already discussed how many stores we want to open, and it all depends on what type of response we are getting there. So right now we are getting good response, so we are going ahead. If we start getting lesser response, then we'll rethink our strategy.
Okay. Okay, right. And sir, regarding we are already have major market share in Bihar. So in Uttar Pradesh, how we are getting response? Like what is the competitive intensity in Uttar Pradesh? Any big players are expanding parallel to us, or we are the only big player expanding in the UP?
Right now, we are the only big player expanding there. Modern trade is there, but they are not expanding in that way. And we want to have the business advantage also. So we are the only retail players there, which are expanding in such a way. And so this will what management thinks, that this will be our biggest asset also going forward.
Yes. So we will have the first mover advantage in UP also, right?
Yes, of course, absolutely right.
And sir, regarding right now we are expanding in 3 states like Bihar, Jharkhand, and UP.
Right.
So after this, what other states we are planning to expand? Like MP and Rajasthan, or?
No, not in Rajasthan. We believe in creeping cluster approach. So we will be going up to Lucknow in eastern UP. After that, we have been assessing our market position in Chhattisgarh also. Similarly, there is again we are assessing Madhya Pradesh also, where we intend to start from the eastern part of Madhya Pradesh. So these are the places right now which is being considered.
Okay. And sir, geographical area-wise, UP is like Bihar and Jharkhand put together. So how much store we can plan in UP? How many stores?
There is immense opportunity in UP because it is very, very densely populated. The overall population is around 24 crores. Assuming that half the population lives in eastern UP, it is as big as Bihar. So that way you can find that the opportunities are as good as what were in Bihar.
Yes.
One thing we can only say that we'll be in Hindi heartland. That is our policy, and we are going to remain there.
Okay, sir. That's it from my side, and congratulations for the future growth and future endeavors.
Thank you very much for your good results.
Thank you. The next question is from the line of Rakesh Sethia from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Thank you for the opportunity. A couple of questions. Firstly, how many stores did you mention which are less than 6 months? Did you say 30% of the store? Did I hear that number correctly during the call?
Yeah, 30% of our stores, right,
are less than 6 months old.
In 6 months.
Okay. And secondly, is it possible to quantify that in this quarter, what would have been the impact of
Can you speak louder, please? Hello?
Yeah. Is it better?
Now it is audible.
Yeah. Is it possible to quantify what would have been the impact of, additional expenses that probably would have gone in the stores which are still not mature? I'm just trying to look at the margin. So there is roughly about 150 basis point margin contraction from same quarter last year. How much of that would have been impacted by the additional cost of stores which are probably not yet mature?
You still are not able to understand your question. You want to know what impact you expect from the effect of the newly opened stores, right?
Yeah. So if I look at your operating expenses, so last year your margin was about 8.9% in the second quarter, right? This year your margin is 7.4%. And when I look at the gross margins, they are broadly similar. So the entire margin contraction seems to have been led by the other expenses, which probably would have meant that you would have incurred those expenses in opening stores and etc. So what I'm trying to understand is how much of this margin contraction is because of the additional charges that would have gone in into store opening versus otherwise you would not have incurred it.
I think that it is let us say it can be 100 basis points that will be going forward that can come as a cost for opening new stores to the company. But I'm very sure that it will, after these numbers of stores, they mature, even slightly matures, then again, it is going to contribute to the EBITDA.
Understood. Last question on growth. If I look at this quarter's growth of, let's say, 21% on year-on-year basis, and when we look at the growth number last year, same time, was about 43%, right? So I'm just trying to understand, you seem to have opened more number of stores, yet your growth this quarter seems to be slightly lower as compared to last quarter. Is it just because of the festive season move or?
No. There were a number of reasons. A few of them I already discussed when I was speaking. There are other reasons also that this time we have opened more stores in the very lesser time. And that time, in fact, our store expansion was very, so not that rapid. So this is the reason, nothing else.
Understood. So does it mean that, going forward when we look at your numbers, is it possible to sort of think about how the sales is probably there in the month of October and November? You would have already known some of that data. Can you sort of help us understand that your first store revenue?
I can tell you right now that we have entered in a very good quarter at the moment, a very bullish quarter, I'll say. In fact, everybody was waiting for this festive season to come because it has been delayed this year. So I think we will be doing more than what we have been projecting. So this is what I can suggest as of now.
Understood, sir. Thank you very much and all the best, sir.
Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah. Hello, sir. Just the first question is on the GM difference for this quarter, especially on a YOY basis. So there is a 100 bips difference. There is a lower 100 bips. If you could explain that, and what would be the salience or the share of AC business in these quarters, quarter this year, quarter to this year, and quarter to last year?
Which business you said?
Air conditioners.
Okay. AC has, in fact, it has grown by around 32%.
Okay. So then, yeah.
I'm talking about H1. It has gone up by.
So I am only asking for quarter two.
Quarter two, in fact, we are not having. In fact, quarter two doesn't matter. In fact, we don't sell much ACs in quarter two because it already gets rainy season.
And what explains the 100 bits lower GM in the quarter, gross margin?
I had been discussing this right now also, that we can have a 100 bits dip in GM, of course, because our newer stores and a rapid pace at the pace we are opening newer stores, which are yet to mature or establish themselves. But I think that going forward, all these stores, whatever we have done, in fact, 25 stores we have added in H1, it is going to contribute to our top line as well as bottom line very quickly, maybe by next 2 quarters.
Hello?
I told you, maybe by next 2 hours and 100 bips, we can get a hit of 100 bips in GM.
But sir, when your SSG is 19% in a 20% growth, which means the contribution from new store is less, and in one of the answers you mentioned that new stores were open towards the end of the quarter only, they were not available.
It is for the H1 19%. Hello? Sorry, you were mistaken. It is for H1.
Then what is the SSG for quarter 2?
We do not have quarterly number.
Okay. No problem. Then the other question I have is the other expense line. You mentioned 2 crore as ESOP expense. Are there any other expenses, higher expenses or any expenses which you want to highlight which may not be a part of store expansion and have gone up in the quarter?
Not at all.
Not at all.
We do take care to tell you in the earnings call if there is any exceptional expense. We do not have any exceptional.
No problem. And last question, sir. I understand the season shift that is there this year, the festivity shift. What would be, and October would be the month where obviously Navratri would have come in.
Yeah.
So October month, what is the growth on a YY basis?
We actually, again, we can give you only quarter overall for a quarter. Try to understand one thing. I'll tell our investors to understand this. Because again, last year we have best season is Dhanteras Diwali for us, not Durga Puja. Of course, your sale starts going up after month of Shraddh. So first day of Durga Puja, Navratri, we start getting good business. But our business, in fact, it explodes by Dhanteras and Diwali.
No problem.
So last year it was in October, but this year it will be in November. So judging by month to month, that will be not really good because it's all very seasonal matter is there. So this is the reason we are highlighting our performance for H1 also. Because if you have very good Q1, then you have to have a slightly weaker Q2. So it will be very good judgment of company's financials if you compare by half year. So this is the way we are presenting in our investor presentation also, where you will see. I hope it is clear to you, because that will give you a better picture of what company and what company is actually delivering financially.
But generally the consumer sentiment or what you see on ground in terms of demand outlook, that all is fairly strong? Whatever initial assessment that you could make.
Yeah, very, very strong, I'll say.
Okay. Done, sir. Thank you very much and all the best.
Thank you.
Thank you. The next question is from the line of Ranjit Sivaram from Mahindra Mutual Fund. Please go ahead.
Yeah, hi sir. Good afternoon. I just wanted to understand. You had mentioned that there is a 2 crore ESOP related expenditure in other expenditure. So apart from that, is there any other reason why this other expenditure was high this quarter? It is around 10 crore compared to 5 crore last year. So we understood 2 crore increases to ESOP. Is there anything else apart from this?
No, nothing else.
Okay.
But ESOP, you are not getting it right. ESOP is in employees' benefit expenses, and you are talking about
Okay. ESOP is in. So why this other expenditure then? What is is there any other cost related to the new stores?
Yeah, that is the OpEx incurred for opening newer stores. That this is what I have already highlighted. That so expense will go up, of course, but the number of stores has also gone up.
Okay. So we have to believe that probably once this new stores which have been added, once they start delivering in terms of the profitability, then this EBITDA margin should normalize to around 9 to 10%.
Yes, we have been always guiding in 9 to between will be 9 to 10%, and I think in H1 we have achieved 9%.
Okay, and sir, this if you look at the overall sales SSG, you have given it for the first half, but when we look at the store additions and your growth, it seems that there was at least we can derive that there is likely to be a decline in the same stores growth this quarter, or is it there is no risk in terms of a decline in same store growth sales this quarter?
In our opinion, there is no risk of declining stores because in fact, we have been expanding since last rapidly or aggressively expanding since the pandemic days. So I don't think. So there is a number of clustered stores in between. And I think that going forward, we are going to have this very good same store sales growth because these all stores are now blossoming. I'll simply put it like this. So let us say stores which have been opened in FY'20, 21, 22, these are all now maturing and blossoming, and these are contributing to our same store sales growth. Which are at least 1 year old.
Okay, and sir, one more last thing, like the cost per store, is it in an increasing trajectory or a reducing trajectory compared to last year? Is the cost per store increasing?
You can align it with the inflation figures and all that, like rent increases 5%, the salaries normally we give at least 10%. And with growth in sales, our employee expenses, benefit expenses also grows because of certain target linked incentives we give to our employees. So of course it is going to rise, but it will be in line with our inflation rate.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Akshat Mehta from Samiksha Capital. Please go ahead.
Am I audible?
Absolutely, you are audible. Go ahead.
Thank you, sir, for the opportunity. My first question is, sir, that if I look at your inventory, though you're saying that the inventory is higher at the end of Q2, but on a per inventory days, if we look at it, you are showing 65 days at the end of Q2. That has come down from 70 days in last year H1 and around 80 days at the end of Q4. So I just wanted to understand why inventory in terms of number of days is going down. Are we expanding into new stores where the inventory required is lower, or what is the reason?
Smaller stores are also there, of course. So smaller stores also around 18 we have opened, which is overall open from last H1 to this H1. So number of days, I think it's good enough. We are improving on that, I suppose.
So if you could share, what share of total stores would be smaller out of 130?
It has come down from 70 to 65 days.
No, I'm asking out of 130 stores that you have, how many would be smaller ones?
18
stores, as you call it.
18.
And going forward, is there any plan for opening more smaller stores, or majority of them would be larger ones?
Majority will be larger one, of course, but the smaller store will be. We are just like what I said in my earning call was that we are always looking for newer opportunities. Like as I told you, you may be listening at that time. In fact, we have done more than 150 loan melas in rural places like panchayat level, block level, and all that. What we intend to know and understand that what is the potential, how much, and we were very much surprised that even in block level, even in panchayat level, the people were buying handheld for as much as even 1 lakh rupees. So these in fact incidents has pleasantly surprised us. And maybe we'll be looking out for opportunities to do it. We cannot exactly tell you what we are going to do, what is our future strategy. But our strategy will be always to capture whatever market is there, and so that that builds up the brand also across Bihar or Jharkhand or UP.
Okay. Sir, my next question was that if you look at your employee cost from Q1 to Q2, on absolute basis, it has come down from around 15.4 crores to 13.5. So, I mean, I understand both includes 2 crores of ESOP. So, why is that? Have your number of employees come down, or what is the reason?
No, I told you again. I have told you that it goes up with the sales. So, if you'll find that we have, in Q1 our sale was double of what we have done, more than double what we have done in Q2.
So, that includes incentives as well?
Yes, of course.
Commission or incentives for sales.
If you really do very well, then of course this is a very dynamic type of incentive strategy with what we in fact implement, which obviously I cannot share, but that is the way we do. So if we have very good sales, then our employee cost will go up.
Okay. If you could also share some highlights on how festive demand is going till now. It is now start of November. If you can throw some light on that.
Till now, it has been very good and very robust.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yes, sir. Am I audible?
Yes, very much. Go ahead, please.
Yeah. So one question was about this. Has the promoter selling and the related entities stopped? Because earlier you said that we wanted some marquee investors, and some marquee investors like HDFC Mutual Fund have entered into a company. So no more promoter and related entity selling, sir?
No, it cannot be limited to only HDFC Mutual Fund, but we can, of course it will be a really good investor, then only we are going to value it. Otherwise not.
Yeah, because earlier this question was raised, so you had said that yes, it was for the strategic nature only, and it is on verge of stoppages.
This is what you are only saying that we give shares to HDFC Mutual Fund. Similarly, if some marquee investor comes in, then we'll consider.
Okay.
In fact, that adds to good value to our investors as well.
Yeah, because if these marquee investors buy from the market, then the minority shareholders also benefit, no?
But then if they buy, otherwise also everybody starts buying. So that I don't know how it's going to impact the share price. But one thing I know that market investors are necessary, and if they go into the market, then they're not going to get that number type of share. And big investors, they cannot have a very small stake.
Mm-hmm. Yeah.
You don't have to worry for that, because as I told you, any dilution will be very, very strategic, very calculated, and only if very good investor is willing to come in. And that's all.
So that is, I agree, sir, in the sense that HDFC Mutual Fund entering in our company is really a positive sign, sir, very positive sign, and increases the confidence in a small companies like listed at BSE, coming out from the SME background, from Bihar. So it does increase the confidence, I agree, sir. And second thing is, sir, about the basically any plans of going in for the Big Four auditor, because our local based auditor is also still in Patna based, no, sir? And any plans of going in for that, sir?
Yeah, we have told that we are already exploring this, and maybe in a year or so we'll be onboarding. Not I'll say Big Four, but maybe Big Six.
Okay. That's also a very helpful measure, sir. And how has been the performance in UP side, sir, especially Banaras, where the store was opened some time back, and how has been that performance, sir?
Banaras is doing very well. And adjoining, I think, even Prayagraj, we have recently ventured into Prayagraj, Allahabad. That is also doing exceptionally well. So we are expecting that it is only a matter of time. They will very much explored.
The Prayagraj store was opened very, very recently. Banaras, I believe, was slightly older.
So they have done very well. If we got a contribution of 47% sale growth in Q1, you can understand that those stores have done very well right from the beginning, right from starting.
Okay, sir. And sir, we are opened in some real small, I believe that Harinagar Sugar Mill situated in Ramnagar. There also we have opened a store, and in a place called Dhaka. Very small places. So do they have the real potential of the meeting the expectations of the growth of Aditya Vision, or very small place will take time, sir?
No, these stores we had in fact expected a sale of only 50 lakhs. But what we are now projecting is that they are going to do more than 7 to 8 crores of sale overall in their first full year. So I say that they have been very successful. And even these smaller places, again, the population is very high. And since affordability or retail financing is so easy and quick, that these places are giving good business.
Mostly NRI, Biharis working in Middle East and other places helping out with the procurement, you mean to say, sir?
I beg your pardon, what did you say?
Non-resident Bihar people working in Middle East, Saudi Arabia and other places, and families staying back in small places in Bihar is helping us out, you mean to say, sir?
Immigrants,
Yeah. Who are working outside India.
Plenty of inflow of money is there in these places. Plenty of money.
That is a minority region, I believe, Dhaka, and a lot of people are working. Okay, sir. Thank you, sir. Thank you.
Thank you. The next question is from the line of Tanay Desai from 11H Advisors. Please go ahead.
Good evening to the management. Am I audible?
Yes, very much. Please go ahead. Good evening to you also.
Thank you, Mr. Sinha. I represent the family office of Mr. Janak Desai. It's a pleasure to be a shareholder of Aditya Vision. Just one question and one suggestion towards the end. The question is, one of our competitors in the southern part of India, I think they grew their profits and EPS by around 20% this quarter. And they are also aggressively expanding, maybe not at the rate of our company, but still pretty fast. So just wanted to understand the geographical difference between the demand scenario in our northeast belt versus the southern belt. And do we have any plans of considering areas outside the northeast belt, say probably around FY'25? Also, very happy with the fact that cash flow from operations has gone up significantly in the half year as well as the quarter. Thank you.
Yes, actually, what you said that you are yourself telling me there, if they cannot grow more than, let us say, their growth rate will be definitely muted. If I go to southern part or something, because they are overall saturated market, even penetrated market as well. So this Hindi heartland, this is a very big, let me tell you, very big opportunity, very big story. This will be the future for growth. This will be the growth driver for the company. So we will definitely stick to Hindi heartland. We have always been, in fact, explaining it to our investors that we are going to stick to Hindi heartland, where we find that not only we can, in fact, we get more support from manufacturers because we are going to a newer destination. Whereas if you go to a very crowded place, they know that already already 10 showrooms are there, big showrooms are there, so they don't have any interest in anyone separately. But when you enter into new territory, new places which is under-penetrated, everybody knows that this will be a new market. So this new market is the story for the entire, what Aditya Vision stands for. So we will be sticking here only. And if you will compare us with competitors, then you will find that there will be difference in top line growth.
Sure, sir. The second question is, if you could help us with the blended cost of debt, what would be the cost of debt for the company at this point?
It will be around 8.25%.
And this is going to remain steady for the next few quarters, right?
It is going to come down from there, in my opinion, rather than going up, because we don't expect interest rate to go up from this point.
Sure, sir. That's great to hear. And the small suggestion is regarding to the previous point made by few people on the call. I think with regard to the promoter selling part, we completely agree that a strategic investor definitely helps, minority investors as well. But in case possible, once the NSE listing happens and volumes open up, at that point maybe you can reassess the selling situation, because from the open market, marquee investors might be able to at that point buy as well. So just wanted to put a small suggestion on the selling part.
Right, it is very nice suggestion, and I can tell you it is very nice suggestion, and we always prefer that people should go that way. But when there is a big marquee investor, then they want to have a bigger share, a lot. So that is simply either they will get in your company through our selling, or they will not come at all. So decision has to be taken at that time. We very much appreciate your suggestion. And yes, of course, next year we are planning to go list ourselves on NSE. So we see better days ahead.
Right, sir. Thank you so much for accepting the suggestions, and wish you a bumper quarter 3 and next few quarters ahead.
Thank you. Thank you so much.
Thank you. The next question is from the line of Vishal Ramchand Pajwani from MK Global. Please go ahead.
Hi, sir. Thanks for the opportunity. Congratulations for good set of numbers. My first question is, what would be the average ticket prices for AC, refrigerator, and television segment in your store?
Average, what did you say? Can you repeat your question?
What would be the average ticket prices for the AC, refrigerator, washing machine segment?
I'll tell you. ASP will be AC is, in fact, H1 24, it's around 41,000. What else you want to know?
Refrigerator and washing machine again.
Refrigerator will be around 21,000. Washing machine will be around 20,000.
And what about the television? Television?
Television will be, it has in fact come down from last half year, because there was a good price correction in panels. So it is around 35,000.
Okay, sir. And how are you seeing competition from other offline retailers like Chroma and Reliance Digital in your area?
They have been always operating here. They have been operating since 2014 here. So whatever we have achieved, we have achieved along with the competition. So I don't think so that it is going to do anything, dent our growth chart. That is very clear that we have grown 37% since last H1 to this H1.
Okay, sir. That's it from my side. Thanks for the opportunity.
Okay.
Thank you. The next question is from the line of Faisal Hawa from Hawa and Company. Please go ahead.
We will get into private label selling under our own brand. Can you hear me?
Hello.
Yeah, we will get into private label selling under own brand.
No, my answer will be a simple no.
Okay.
We have no plans to sell our private label.
Okay, sir. Thank you.
Any more questions?
As there are no further questions from the participant, I now hand the conference over to the management for closing comments.
We trust that we have addressed all your inquiries to your satisfaction. If you have any remaining unanswered questions or I was not able to explain it well to you, please do not hesitate to contact our investor relations agency, Go India Advisors. They will be more than happy to assist you from further. Thank you so very much for sparing your time for this earning call. I thank everyone, including the organizers. Thank you very much and very good day ahead.
On behalf of MK Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay, bye-bye, goodbye.